Hey guys, Dan from digitaluptake.com. Hey, today guys, I really wanted to just dive in and show you guys a few trades that I've made recently and how I typically trade in the cryptocurrency markets. Right now, the markets are so hot. I mean, they go up and down, but they're so hot, meaning they're so volatile that they go up and down so often that it's actually quite easy to make money in the market or on the exchanges today. And I'll show you exactly how here in just a moment. What I typically do, and I've only been doing this for maybe 2 months, and I've been learning it, more and more over time from a variety of people. I've done some stock market investing, penny stock investing in the past, like we're talking maybe a decade ago, maybe 8, 9 years ago, something like that. And I've tried this method before, and it does work decently well in the penny stock market, the regular stock market, whatnot. But it works extremely well, and it's very effective in the cryptocurrency markets today. And the cryptocurrency markets being so new and whatnot, there aren't many institutional investors or big time players yet trading on these alt currencies or even Bitcoin, really, for that matter. I mean, that is starting to pick up. More institutional players are coming, more market makers are coming, so forth and so on. But it's much less than the traditional stock market, traditional penny stock market, over the counter stocks, and so forth. So anyway, I want to show you this method. It's called base trading, and what it really is, it's trading on people's reactions to panic. People typically will panic when a price starts dropping or falling past a certain percentage. The group that's invested in the particular stock or cryptocurrency will tend to panic. And as the stock is tanking, more and more people will sell the stock because they think it's just going to go to the floor and it's just going to be gone and it'll go away, and that they'll never recover their gains back or even maintain, their account or their positions the way they first bought into them. So I'm going to go ahead and show you a little bit of how that works today. I'm going to use Coinigy here. You guys can see that I'm on here. I've only been using Coinigy for, gosh, less than 30 days. You can kind of see up here, I have 4 days left of my trial, and I'm about to sign up for a paid version. Before using Coinigy, I was trading directly on the exchanges and like Bitfinex, Bittrex, Polynex, so forth and so on. I was trading direct on those exchanges, which means that I had to go to an individual or a separate website every time I wanted to trade, right? Because Bittrex, Polynex, hit BTC. All of these exchanges are technically different websites, and I have different accounts across all these different exchanges. So I'd trade on them individually. About a month ago, a little less than a month ago, I was introduced to Coinigy, and what Coinigy basically is it allows you to pull in your cryptocurrency, so essentially your money, your cryptocurrency into Coinigy, into a centralized platform, which is Coinigy. So you can pull in, your wallets and your cryptocurrencies from Bittrex or Polynex or, Bitfinex or whatever exchange you want. You could pull those all into Coinigy here, and it makes it just really easy to do trades and whatnot, to manage all of your money from this destination. So anyway, let's get back into base trading and what I was talking about. So right now we're looking at an Ethereum to US dollar tether market or exchange. I'm looking specifically at Bittrex exchange. You can see up here, looking at Bittrex and looking at Ethereum to US dollar tether. And I'll talk about what US dollar tether is at a later time. But anyway, I want you to look at this chart, and I want you to take a look here for a minute. I'm looking currently at the chart in 1 hour increments. So let me zoom in here. Each one of these blocks right here, it's an hour, right? So each one of these little boxes, each one of these candlesticks, as they're called, it represents 1 hour. You can dial that up or down, all the way down to a minute, all the way up to a month. So let's just kind of dial this out for a minute. Let's just say 1 day, and let's just say 3 months, right? So this is kind of, actually, let's go to a year. So this is how Ethereum has been performing over the last year. Every day, right? It's been kind of going up and down. And so what I do is I tend to trade only when the stock or the cryptocurrency is at the bottom. So when there's a panic or when sellers start really dumping a particular coin, that's when I'll jump in, right? That's typically when most people dump and panic and sell. That's typically when I buy, and that's when you want to buy as well, right? Because you're buying against people's reactions. You're buying to people's panic, against people's panic, thinking that the coin is going to crash and they're not going to make any of their money back. But if we've seen over time, these markets do tend to recover. And as long as you have confidence in the coin itself, in the technology itself, right, and you don't think the coin is going to go away, and you think or know that there's a base of people that feel the same way as you do, there's always going to be a buyer kind of at that bottom level, at the bottom of the market, at the bottom or below the base, right? And what do I mean by bases here? So let me just jump back into it. So I typically look at charts on a 1 hour basis because it gives me enough time to react if a stock is falling, but it also gives me enough time to actually trade, to actually execute the trade. You got to be fairly quick to get in on the trade when it's at its lowest, and then you got to be fairly quick to trade the stock when it's at its highest, right? So you can make some money there. And it is often, it's sometimes tough to time these dips and these rises, but I think the technique that I'm about to show you, it's a very, very good way to do this. So let's just dive in. Let's just look at an example of what I mean by a base. So what I mean by a base is anytime there's a down, like a very sharp downswing or a very sharp uptick in these markets, that's what I'm referring to when I say a base. So if you can look right over here, in, let's see, like middle of August, a couple weeks ago here, Ethereum just bounced right up. It went all the way up to 316, around 314, $316, maybe 320, somewhere around there, right? Went all the way up, one of its highs, right? Then you can see only about, 1 day later, maybe less than a day later, half a day later, it went all the way back down to 276, right? And when it dropped like that, it actually created a base. So let me zoom in here. Let me go back to that base. So like right here, see, you can see this base. It went all the way up, and it dropped all the way down, and it settled around 276 before bumping right back up again. So I'm going to draw right here. This is a base, right? That's a base. That's the low point day to day when the market's trading. People were panicking. They were dumping the stock. And then they met resistance, right? At about 276, there were a group of buyers that said, wait a minute, this is a good price. And they're looking at the 275 marker is what I suspect. 275, it's more of a psychological a point, right? It happens around 300, 275, 250s, 200, any of the kind of even round numbers, if you will. And I know 275 is not an even round number, but it's a signifier, right? When a price drops below one of these signifiers, people tend to think, oh, that's a great deal. Oh, wow, it's never going to drop below that price. I need to snatch this up right now. And it looks like that's exactly what happened right here. The price was going down, all the way from 320-ish all the way down to 275. People saw that and they said, oh, 275, that's a screaming deal. I need to buy into that. And you can see a number of people bought back into the stock. And so what happened is it bounced from 276 all the way up to 304 in the matter of minutes, right? And that's a decent percentage, right? That's probably 10 to 20%. Actually, what is it? It's around 8%, something like that, where it's bouncing from 275 all the way up to 303, right? So what I'm referring to as bases, it's the bottom. It's when there's a panic. It's when people are dumping and selling their stock as quickly as they can, and the bounce is when people realize, oh, this price is actually a really, really good price, and they buy back in. So what I typically do, and I don't typically draw these, I did at first, and you may want to do the same. It kind of helps to keep track of these bases because not all of these are bases, and I'll get into that a little bit more later. But so what I typically do is I follow the stock day to day. Anytime I see a base, I kind of draw that line, or I mentally, just check and make sure that it's set. What I've been doing as of late is I've been going up to here in Coinage and I've been setting alerts, right? So anytime I find a base, I will go and I'll create one of these alerts, and then I'll, I'm gonna do that, put this back up here. So I'll set one of these alerts and I'll just kind of drag it down to the base, and I'll say, okay, that's a base, and I will set the alert, right? Then anytime the stock drops below 275 again, I'll be alerted and I can pick to buy, right? Okay, so that's kind of how you find bases. So let's look for a few more, right? Okay, so this is going up, going back down. Well, technically this could be called a base, right? And it is really a base because there's a pretty significant bounce, right? 287 to 310. That's a pretty big bounce. So I would draw a base there, right? Draw your base. Draw your base. And then again, you go up, it's going down again. Oh, there's a base. Is that really a base? Maybe, maybe not. technically it is a base, but it's a very small base, right? It's only bouncing from 294 all the way up to 304. Not a huge base, right? I try to look for bases that are much larger, right? The big percentage points, where those bases are. Whoops, drawing lines there on accident. So, okay, so going through this chart, we see more and more bases. Okay, we see another panic. See, it goes all the way up again, all the way up, like past 320, and then it goes all the way back down again, back down to 285. So I would call that a base because it's such a dramatic drop or decline that it, technically speaking, is a base. So I draw my line, okay? And what you'll notice is that once you start drawing all of these bases, so let's just say this is my base, my latest base, right? And I'm drawing these bases as the chart's going along. What's happening is once people notice, or once these prices fall down to the base, you draw the base and they bounce back up. If you look at what happens a few days later, in this case, they typically always recover. Not always, but 99.9% of the time they recover. And that's because they're being traded. The actual coin is being traded based on reaction. It's being traded, based on emotion and not necessarily on factual changes in the coin or the technology or the market. They're just based on emotion, right? And so what I typically do is I'll look, okay, here's the base. And what I'll tell myself is the next time the stock falls below this particular base, that is a great opportunity to buy. And I'll show you why. So look at this one, for example, in this case, right? So imagine I just saw this coin tank, price tank to 285. I draw my base, right? Then I watch it. It goes all the way back up, goes back up to 309, okay? And then we start to see kind of a slow decline here. And right about right here, it actually drops below 285, right? All the way down below 285. And in this case, I think it dropped all the way down to about 271, right? And then what happens right after that? After it drops right below the base that we drew, drops right below 271, right? It bounces right back up and it actually goes way above the base, right? It bounced all the way back to 311. So think about that. 271 to 311. That's huge, right? That's a big trade. That's a big gain if you can get in. And so where I would typically buy, let me grab the pen here, I would typically buy anywhere right below the base, right? You see the base over here, drop below the base. This is all perfect buying territory, right? If you would have bought anywhere, here, anywhere down in here, you would have made a safe and a good trade. And then on the way up, the stock comes up. Let's just say you bought on the high side. Let's say you bought at 283. You can even wait till you get, to 293, make a sale. You can wait a little bit more to 295, make a sale, all the way up to 309. And of course, you don't always know how high it's going to go. So what I typically do on the way down, I'll typically nibble. I'll make small purchases when it's, small buys right when it's below the base here. And the deeper it goes, the farther down it goes, the bigger the trades, the bigger positions I'm taking against that. And same thing on the way up. On the way up, I probably would have sold, if I would have bought like right here at 284, I may have sold at, 294, something like that, just to get some of my money back. And then I would have probably, had a few positions open to sell as this kind of went all the way up. Okay, so that's kind of the basics of how I do base trading or reaction trading. Let's take another example here. I'm drawing all over the place with this marker. So let's go again. Okay, so let's scroll over just again. So, okay, we're going. Okay, there's another base right here, right? Okay, let's draw that. I'm not going to draw that one right now, but you get the idea. So there's another base, right? The stock goes up. Price goes all the way back up to 311. Get my pencil here. All the way over to 311 right here. And then, okay, it's going down again. It's starting to go down. Technically, I could have marked this as a base, but it's a fairly low base, or I'm sorry, a fairly small base. But let's just do it for the example I'm trying to show here. So technically speaking, I could have marked that as a base, right? Sorry, that's not a very good line. Let's see. Okay, let's just say that's a base, right? Drops, didn't drop a whole ton, but for the sake of this example, let's just draw it. Then it bounces up, bounces all the way back up again, 311, right? Then what happens? It's going down. Right when it cracks the base, right here, about 295. This time it goes down to only 292, so not very much room to buy there. But again, you'll see it bounces right back up. back to 308. I probably wouldn't have bought or purchased anything at that point because it was just too small of a base, right? But I'm just trying to articulate the point here to you. So let's do it again. Okay, so we have another base here. That's the new base, right? Goes up, 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 then starts dropping again. Oh, look what happens. It cracks the base. I would buy all within here, cracks the base, and what happens? Goes all the way down. Oh, shoots all the way up again, right above the base. Think about it. If you would have bought at 283, you could have sold, around 300. Not huge, but again, a gain, another gain. And these small gains, some of them aren't so small. I'd say they're probably between, 6, 8%, maybe 5 to 10%, all the way up to 50, 100%, depending on what's going on in the market. I've seen some pretty crazy fluctuations. So anyway, okay, let's put that back there. So that's the buying area. Okay, so now let's look at this again. So you draw your base, you keep going, keep going. Okay, so now, that's my new base. Went all the way down to about 274. Right, okay, so I marked my base. Just going through again. And in this case, you'll see, okay, this is when, just a few days ago, actually, Ethereum just kind of shot up. And it shot up all the way to around 345. Pretty good, right? It's going back up. So I didn't really do anything around here, right? But if you look at this again, look, I want to show you again. So we got, it's dropping. And technically, there's a kind of a small base here, but not very good. Let's see if we got a base over here. I'm going to call, there's not really any great bases here to speak of. So let me go to a different chart here. Let me see if I can find an example of ones that I've actually traded. Let's go to Neo. I traded Neo not too long ago. Okay, so this is actually a pretty good chart, pretty good example. Wow, this is a really great chart. Okay, so I'll just start maybe right around here, and you can see this every time. I mean, this is just craziness. And if you could time this right, and if you could learn this technique, you can make a lot of money in this market, right? Okay, so let's just say that, we have a base right here. We're seeing a drop, and then we're kind of seeing another uptick right here, right? There's a pretty good uptick right there. So I mark that base and I wait. Let me zoom in a little bit here so you guys can see what I'm doing. Oh, second. Still trying to get used to coin again. Sorry about that. All right, let me zoom in, pull this over a little bit. All right. Okay, so again, you'll see, goes up, goes down. This is your base, drops below the base. In this case, goes down to, let's see, about 13.7. And then what happens? Immediately after, it goes up to 16.3. That's a huge percentage, right? That's like 20% or more. If you could get a grand in there at 20%, you made $200 in the matter of like a couple hours, right? Not bad. And the same thing consistently happens throughout these charts over and over and over again. Here's another base, right? This time it goes up, goes down. We have to wait a little bit longer. Let's see, that was on August 15th. But look, it goes up again right past the base. And in this case, we had to wait till August 17th. So it took 2 days to go back to the above the base, but that's fine. That's fine. We have a little bit of time to wait. And here's where I actually made a couple trades. Not sure if you can see this very well, but here's where I made actually a couple trades, right? So I was watching, went up. I had this as my base at the time. It went down. I got in at about 11.8 approximately, and I sold at about 12.9. Not huge, but about 10%, right? Can't remember how much money I specifically put in that position, but 10%, not bad. Another time it happened, same thing here, right? So I draw my base. Again, my base is right here. And again, what happens, after I sell, this was like kind of right after one another, it drops again. And what does it do? It goes right below the base. I almost got in at the bottom. The bottom was 10.6. I got in about 11.2. Could have gotten a little bit lower. What happens? It bounces right back up. And in this case, I sold at 12.6. Took another about 10, 12, 13%, something like that. But I could have, waited till it went all the way up to 14 and got a much larger percentage, but you never know when that's going to happen. So I try to, like I said, taper my my sells, right? My buys and my sells, really. So that's another example. Let's go to one other chart. Let's go to NXT. I think I have a, let's see, I think I have a trade on here too. Actually, maybe not on this one. Let's see, Ponix, NXT. Yes, I did. Okay, here's another one. Again, very exactly same concept. So in this case, it was dropping, and I thought, okay, it's dropping. There's got to be a base, and I was kind of watching bases all along the way. This was the base, the bottom base, if you will, and that's where I kind of marked my chart. Then you see it jumps right back up. Then it starts tanking. I noticed, oh, it's tanking way below the base, and so what did I do? I waited. In this case, I waited a little bit too long. You can see I traded here, kind of on the uptick, where I would have preferred, right, to buy more like down here towards the bottom of that drop, right? But you really could have purchased or bought anything really right anywhere around here, right? And that's what I did. I bought right here at about 2491, and I started selling at about 2895, and I all the way up from there, 2921, 3069. So again, big percentages, and you could do this over and over again. So anyway, I just wanted to show you that technique, that trick that I've been using. This is not something that I invented. It's not new. You can go look at it, go research it a bit more, learn about it. I'm going to teach you about this technique going through these videos as I keep developing these videos, and teach you a little bit more about other techniques. There's another site that I want to show you about as well. I'll show you probably in the next video or after, where it allows you to mark up charts, save them, share them, so forth and so on. But anyway, hopefully you found this useful. This has been an incredible way to trade cryptocurrencies for me. It's really changing my life as we speak. I'm making more money on a daily basis now in the cryptocurrency market than I have in many full-time jobs. So I'm quite happy with it, and I think there's a lot of promise here. And I think the market in general is just gonna really go up a ton. So anyway, drop me some questions. If you have any questions about this technique, this strategy, let me know. If any of you have done this before, let me know as well. I'd love to know what charts you're marking up, what coins you're investing in, and so forth, and we could kind of trade tips. I'll post this video at Steemit at my blog, and would love to hear how you guys like this strategy and if it's helpful for you. Anyway, I'll be back later. See you guys.